Welcome back. And as summer vacations are approaching, of course, for those who have them, we connect with the management of Lemon Tree Hotels, which is also doing well for itself in today's trading session. The Chairman and Managing Director, Mr. Patanjali Keswani, is joining in. Mr. Keswani, good afternoon. Thank you for joining in. You know, as summers are approaching, of course, the trend for travel tends to increase. What are the demand trends that you've witnessed, firstly in the fourth quarter, of course, and what are you expecting to witness in this upcoming quarter as well for the vacation season?
Good afternoon. Well, firstly, Q4, I think I've said it before too, is going to be a very good quarter for us, and much better than the previous year same quarter. Coming to H1 of this year, I was just reading that the Indian Meteorological Department says there'll be a lot more hot days. So that is not good for travel. And if you have heat waves, typically people, as you can imagine, would not travel. So that's a downer, not an upper. As far as holiday season goes, that will be good for resort hotels across India. But I think what we have seen this year, and if you see the various reports that are coming out, resorts in India now had gotten somewhat overpriced. And with the opening up of nearby destinations like Thailand, for example, there has been a lot of movement out of India for resorts, for resort stays. And I think that is something which will become visible for those companies which have large resort inventory in even Q4 of this year. Overall, however, see, what I'm looking at is something entirely different, which is that what is the number of households in India that have, roughly 30 lakhs income? And that is the key metric for the hospitality industry. What I find is that as more and more households, with an increase in, with a 6-7% growth in GDP, in the next 5 years, the number of households that earn over 30 lakhs an annum will increase 4 to 5x. So that is where the real structural shift in demand for mid-market hotels will occur. Like has happened in every other country in the world that went through a similar change in its cohorts of consumers at $8,000. That's the number, magic number per person in a household of 4 or 5. So that's
very interesting. Yeah.
Yeah, so that is interestingly in India, if you see it started with, you see it in the other countries, it started with SUV sales. SUV sales, highways which are being built in India, Vande Bharat, the fact that so many new aircraft are on order, airports are being upgraded, it is all a proxy for ultimately what will be very high demand for branded hotel stay.
All right. So holiday season not particularly good for resort hotels because of the heat wave. But for you, it is not a problem because you're obviously catering more to the business traveler. I just wanted a couple of things. You said that, there were competitive opportunities opening up in the resort space itself, where people were going to nearby countries, etc. as well. And the magic number that you spoke about. Just from a average room rate standpoint, what I wanted to understand is that do you think that now ARR increase will largely be inflation-led, and for the industry, growth will be more occupancy and new capacity addition-led, because that reset of undervaluation has already happened, and any more than that may actually be counterproductive? Would that be a fair assessment, or do you think there's still room for ARRs to grow higher?
I think it's a very unfair assessment.
Okay.
Let me summarize. And I think I mentioned this to you earlier too. The average rates in India today, in absolute rupee terms,
yes,
are 15 to 20% less than what they were 18 years ago. And take into account inflation over 18 years, take into account the weakening of the rupee versus, say, the dollar. So from a global perspective, actually, we are very, very, very underpriced. Okay, because factor costs are high in India. Interest rates are high, cost of debt is high, cost of electricity is high. Now with interventions, political interventions, since we are obviously a political economy, of raising of minimum wages and so on, all these have an impact on our input costs. So I think rates in India in the hotel sector, and you can hold me to it even 5 years later, will double in the next 3 years.
All right. Rates in India will double over the next 3 years. Your investors will be happy to hear that. Some of the customers will be feeling the pinch a little bit. But be that as it may, where there is demand, there is supply, and supply is obviously growing slower than the demand. So that should work for the industry at large, irrespective of what individual consumers feel. But, just from a here and now standpoint, you said that the occupancy in H2, along with the ARR, etc., will be a lot higher, as you had earlier pointed out as well. How much higher, if you could give us a quantified number? Because, in Mumbai itself, the big delta would be increased occupancy in the Aurika properties. How much do you think your fourth quarter will be in terms of occupancy and ARR? And in light of that, what is the kind of growth target that you have for FY26 from a revenue and a 50% EBITDA margin standpoint?
So, well, I would say that our Aurika Bombay has finally crossed 80% occupancy.
That's positive, yeah.
Yeah, and that's a 670 room hotel. So what I'm basically saying is it's north of 550 rooms. It is definitely crossed 65% in EBITDA. It is showing no signs of slowdown. My view is that as a company now, because it is same store, we are now comparing same store because Aurika 2 was operational last year in Q4. Our occupancies in Q4 this year will be in the mid 70s. Our ARR will be, high single digits increase. So RevPAR increase will be very significant. Most of our costs are well under control and already factored in with our renovation. So obviously there will be a very significant EBITDA margin expansion. And my view is that this will continue next year. Certainly H1 will be much weaker than H2, as is every year, because it's a seasonal business. But for the next 3 years, till such time I'm pretty sure about this structural shift, because I look at some other proxies. I don't know how many of the viewers here are aware of what the Premier of China said in 2006, which was roughly where India is today. When he was asked about the GDP, he said, I don't even look at it. I look at high frequency indicators like, consumption of coal, freight movement, traffic on roads, construction of infrastructure. India is doing a phenomenal job in all these cases. I mean, look at it. Our highways four-lane highways have doubled in the last 5 years, and I believe that it is doubling in the next 4 years. SUV sales have finally hit that inflection point of nearly 50% of sales of cars. Aircraft orders are 3x of what they are today. So what are we talking? We're talking a huge shift in consumption. And our country is, as the Prime Minister has often stated, we are well on our way to, to becoming the third largest economy. I see nothing, unless it's a self-goal, there is nothing that will stop us.
Mr. Keswani, my heart just sank when you mentioned that room rates will double in 3 years. But when you speak of management fees, Mr. Keswani, what are you targeting? You mentioned earlier that including Fleur hotels, your management fees over the next couple of years are going to be 300 to 350 crore. Do you stick to that? And what's the kind of figure that you're anticipating this time around for the fourth quarter?
Well, quarter-wise, I don't want to comment really, but I'm very much sticking to 300 crores as Lemon Tree, as an operator of hotels, the fees. And 350, when I said maybe it sounded a little aspirational, but actually I would change my guidance and say it would be 350 plus.
All right, 350 plus. That time it was aspirational, and now you are believing that 350 plus more is also realistic. And given the sort of optimism that you're showing, obviously it's reflecting on the way the stock has moved as well. Just a final question from my end. We recently had a note from a brokerage firm which said that there is potential value unlock, which could be an optionality if you were looking at the IPO of Fleur Hotels. I just wanted to know, what's your strategy here? I mean, by when, if at all, you are thinking on those lines as well? The IPO of Fleur Hotels, is there a possibility?
See, what you are seeing today is the listing of many asset companies, or what are internationally called propcos, property companies.
Yeah.
The hotel business is 4 parts: who develops hotels, who owns hotels, who manages hotels, and who brands/franchises hotels. the world's largest players, like Hilton or Marriott, when they announce they are opening 50 hotels, 100 hotels, and so on in India, have not invested a single rupee.
Right.
They are simply going to manage hotels owned by Indians or by funds. Now, when we started Lemon Tree, obviously nobody was willing to give us, hotels to manage. We were an unknown brand. So we had to build our own hotels, and therefore we operated across both the development/ownership and management/brand, which is the entire value chain. However, the kind of investors that want to invest in a capex heavy, capital heavy business are fundamentally now different to those who want to invest in a high growth asset light business. So rationally, it is, I mean, if you look at Marriott even, or look at all the other big players, over time, they got rid of the asset heavy side of the business from the balance sheet. We will certainly do the same. I have said, in fact, that I'm hoping we will do it in the next 2 years, in which case hotels will be in Fleur and all management and brand will be in Lemon Tree.
Right.
And we will have a very interesting, I think, set of options for investors in our business.
Right. All right, Mr. Keswani, thank you so much for sparing time and joining us this afternoon. Wish you good luck for FY26. The management there of Lemon Tree Hotels on the road ahead. Take a short break. On the other side, Manisha Gupta joins in with Kishore Narne, who is the director of Motilal Oswal Financial Services. Stay tuned. Back on the other side.